as we get into August and we get to the Jackson hole down, as I call it, where, where everybody will be focusing on all the central bank ministers that'll show up in Jackson Hole, Wyoming for their annual meeting in late August. And then we'll start looking at the September FOMC and a whole extra month of bad data. That's where you can start to see the seasonal effect be backed by kind of some fundamental stuff too. So whether it'll be enough to finally bust us out, we were sure close last week. But it might. And the next target is, probably more like 2650 on gold and 34.35 in silver. And I think as we make the next move up, I think we'd all probably take that and then see where we go from there.
As the precious metals market enters August, traditionally the second strongest month for gold and silver after January, industry experts are eyeing potential price increases. CraigHemke, founder and editor of TF Metals Report, anticipates a bullish movement driven by macroeconomic factors and possible Federal Reserve actions. Recent data has fueled optimism in the sector. The July US Nonfarm Payrolls report suggested a cooling labor market, causing bond yields to nosedive and propelling gold prices above $2,470 in Friday's American session. This development aligns with broader market expectations of a shift in monetary policy. In the next upward move, Hemke projects potential targets of $2,600 to $2,650 for gold and $34 to $35 for silver. His analysis suggests that a stabilization and upward turn in copper prices could further boost silver, highlighting the interconnected nature of these markets. Major financial institutions are also bullish on gold's prospects. Morgan Stanley forecasts a surge above $2,600 per ounce by the fourth quarter of 2024, while JP Morgan has upgraded its price targets, expecting gold to reach around $2,500 per ounce by year-end. These projections come as gold has risen 50% from its 2022 lows and 25% since mid-February. Supporting this positive outlook, the World Gold Council's recent report revealed that global gold mine production hit a second quarter record of 929 tons. Total gold supply grew by 4% year-on-year to 1,258 tons, with recycling supply reaching its highest second quarter levels since 2012. Investors and analysts alike will closely monitor these developments, particularly as we approach the traditionally bullish month of August for gold and silver. Please tune in for our exploration of CraigHemke's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
As long as there is a perception that there's sufficient metal to be delivered at whatever price is derived through all the derivative trading, then the market continues to function. It's when you get a bank run, when people go, wait a second, I sound like you. Wait a second, hold on just a minute. I didn't do my best accent there, Andy, but that's an Andyism. I'm not waiting 60 days for my metal. It says right here, and so until there's that sort of fractional reserve system breakdown and demand for immediate delivery, then the system continues. And that's why, again, I see even people on my site, but I see people on Twitter or other analysts say, oh yeah, the next stop for silver is 48 or the next stop for gold is 3,000. And I'm like, it has not been my experience in 15 years of doing this that's how these markets operate. They go up in bull markets. They make a series of higher highs and higher lows where price takes 2 steps forward and then 1 step back. All the spec money rushes in. You reach a crescendo like we reached last week with some of the largest speculator and hedge fund positions that we've seen in years. And then all of a sudden, everybody that's bought has bought. The momentum kind of tips over. The banks and the Fed kind of help it along. And all of a sudden, you get this correction where the money rushes back out. And then we're washed and we're rinsed and we're ready to start the next move higher. And I think that's where we're getting to. August is seasonally about the second best month of the year. It doesn't mean we go up every August, but if you average out all the gains from August over the last 25 years, it's second only to January. And then you throw on some of the macro stuff like, even this week we've seen Bill Dudley come out, former head of the New York Fed, say, the Fed should cut now, not wait. Powell's leaning that direction. The U.S. economy is clearly slowing and rolling over. So if we get into August and we either get a surprise rate cut, which I'm really not expecting next week from the Fed, but as we get into August and we get to the Jackson hole down, as I call it, where everybody will be focusing on all the central bank ministers that'll show up in Jackson Hole, Wyoming for their annual meeting in late August. And then we'll start looking at the September FOMC and a whole extra month of bad data. I mean, that's where you can start to see the seasonal effect be backed by kind of some fundamental stuff too. So whether it'll be enough to finally bust us out, we were sure close last week. But it might. And the next target is, probably more like 2650 on gold and 34, 35 in silver. And I think as we make the next move up, I think we'd all probably take that and then see where we go from there. For the last 4 years, at present, and again, this is just where we are right this moment, the silver price is actually seeming to be hindered a little bit by what's going on in copper. Gold took off, broke out in March, 1st of March, and then rallied all the way to the middle of April, almost 15%. But for most of March, people on my side were pulling their hair out. Why isn't silver going up? And often silver going up is the key to getting the mining shares to go up too. And so everybody was going crazy. Well, and I kept thinking, well, let's just wait and see if copper eventually breaks higher because the fundamentals for copper are so strong. And suddenly copper takes off and silver goes with it. And they both peaked out right around the 17th or the 20th of May. Copper traded over $11,000 a ton in London, and I think it hit $5.17 a pound in New York. Well, this week, just 2 months later, it's like $4.17 a pound. It's down nearly 20%. I think there's part of the reason silver is struggling here, at least just even getting some of these hedge funds to buy it, is I would encourage people to, I'm sitting here holding this pen and playing with it. Maybe this would be a good example. Think of gold on one side and copper on the other, and silver kind of the hinge in the middle. And if they can all go up at the same time, that's great. What's currently been happening is gold's been going up and copper's been going down, and silver in the hinge in the middle is kind of stuck. And fundamentally, you could make that case too. You could say, well, gold's a monetary metal and copper is a fully industrial metal, and silver's kind of a combination of both. I guess most people look at it industrial, but you and I and everybody watching us thinks it is monetary and as an investment too. So it's kind of hinging at this point. Copper's been down. Andy, as we record this is the 8th day in a row copper's been down. That's the longest losing streak since January of 2020. It probably won't keep going down for 28 days. So at some point, it's going to stabilize and turn higher, and that'll help silver to rebound too. But for now, till we can kind of get, this kind of rising tide to lift them all, that seems to be impacting at least the derivative price of silver.
India has reduced import duties on gold and silver from 15% to 6%. This decision, coinciding with the country's wedding season, is expected to stimulate demand in the world's second-largest bullion consumer. CraigHemke notes that this reduction could lead to a particularly strong period for silver demand. Historically, when gold prices are perceived as high in India, consumers shift their focus to silver, a trend that the lowered import duties could amplify. Industry officials believe this move could have far-reaching implications. Sachin Jain, CEO of World Gold Council's Indian operations, hailed it as a massive step in the right direction, suggesting it could reduce incentives for gold smuggling and create a more level playing field for honest industry stakeholders. India's decision is already being felt in the global market, with overseas gold prices erasing losses and rising 0.4% following the announcement. This underscores India's consumption pattern's significant influence on global precious metal prices. Let's get back to the interview.
The news earlier this week that import duties on gold and silver were being trimmed in India is not something anybody should overlook. They went from 15% down to 6%.
Yeah.
And really just in time for wedding season. And the history in India is if gold is deemed to be expensive, whatever that is, that massive demand shifts to silver. So you're cutting import tariffs or import, whatever you want to call it, taxes, VATs, whatever. And then at the same time, increasing potential demand fundamentally. We could be entering a very strong period for silver too, but we got to get that copper price to head up. That'll certainly help. People that don't know, melted bars are primarily from the U.S. Confiscation of metal back in the 30s, where they just took it all and they're about, 90% gold or something like that. They're not current standard of 4.9s. And it's just coin melt. They melt them all down and put them into bars and put them in Fort Knox. And Germany's like, this isn't our, why are you sending us this? So we'll see about India. In a bigger picture, why would they want to repatriate some of their gold? Why would Germany? And I look, I don't know. A lot of folks want to, claim they know the timing of, this alternative that will eventually be offered to the US dollar for use in global trade, particularly amongst, I guess what we would call potentially adversarial nations of the US, Russia, China, throw India in the group. And to give that type of competing currency some kind of advantage to level the playing field, well, it's going to be backed by something. A lot of people assume it's going to be commodity backed or gold backed or partially gold backed or whatever. So if you're India and you can see that writing on the wall, again, not saying it's 5 weeks or 5 months or maybe even 5 years from now, but if you can see the writing on the wall that that's eventually where this is headed, well, you damn sure you'd want your gold in your own vaults too. You wouldn't want to be taking any chances, knowing how the game is run in London. So again, I'd say that's also another sign that eventuality is coming, this alternative to the US dollar. And I would just add to that, a lot of people, at least in other interviews I've done, and sometimes I'll see this at TF Metals Report, people think that that's some kind of binary thing, that one day the dollar is the reserve currency and there's all this demand for it, and then one day it's not. No, it won't work like that. This new currency will just simply siphon away some of the demand for dollars. I think most people understand the kind of laws of supply and demand. If you are increasing the supply of any good while at the same time decreasing the demand of that good, the price, the value falls. I mean, that's, the two curves that most everybody, maybe learned in economics class. Well, what would happen if some of that demand for dollars gets siphoned away? At the same time as the supply of dollars is increasing by a couple $1 trillion every year. Lower demand, lower value, lower price for the dollar, which then, again, the converse of that is a higher gold price.
Sourav Gadgil, chairman of P&G Jewelers, predicts that the duty cut will bring down prices and boost consumption, potentially reversing the recent hit to Indian jewelry demand caused by record-high gold prices. However, the move is not without potential drawbacks. While it could boost global prices, which hit a record high this year, it may also widen India's trade deficit and pressure its already struggling rupee. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.